How's it going, everyone? It's Sam. Today I want to talk to you about 4 different ways to become really wealthy. And these are different strategies from crypto investing to index fund investing, rentals, wheel strategy. I'm going to go through them pretty quickly because I'm actually moving today when I'm recording this on Saturday, and then when you're watching it, it's obviously Mother's Day. But I thought, what better thing to show than how to retire when you're talking about Mother's Day, right? If you can retire your significant other, retire yourself, spend more time with your family, that's a great thing. Now, I haven't covered this in a while, but I think this is really valuable. And as we know, there are a lot of different ways to reach retirement and to reach maybe not in retirement, but just some place of financial independence away from your typical job, or giving you more flexibility. Now, I do want to thank Epic, which we'll talk about further in the video, but let's start off here with a new strategy that I've been using, which is selling covered calls and cash secured puts, also known as the wheel strategy. Now, I didn't break it down really in depth here, but we have a portfolio of about $40,000 in this example. That's because I have a portfolio in my options account that is about $40,000 now, and I've made about $1,000 premium a month. And basically what you're doing is, if you have a stock that's, let's say, $100, you can sell someone else the option to buy the stock at $103. So they have the option to get it at $103. They pay you a premium. They pay you a set amount to get that upside. Now, why would they do that? Well, if it goes to $110, well, they collect a pretty good payday then. So let's say they pay you 20 cents for the ability to buy it at 103, basically. So you get 20 cents. So if it stays below 103, you get an extra 20 cents. That's pretty good, especially if it's set out for, like, let's say 1 week, right? So you get 20 cents. If it goes up to $103.20, that's your break even. If it goes up to 105, well, they paid 20 cents. And now there's significant, it's significantly above that 103.2. So it should be closer to maybe $2 or so. So they paid 20 cents. They could sell that for $2 then, and then make about a 10x or so. Now, that is, those are the two sides of it. A lot of people buy calls and try to play that gambling game. I'm actually selling them, so I'm getting weekly income. And like I said, I can make about $1,000 a month from this portfolio. So I just assume maybe that's a little bit high, and I'm just gonna assume I can get half that moving forward with zero appreciation, which is unlikely too, because you have upside appreciation potential, but I'm gonna say 0%. And this is not like this is not 100% sure thing to get wealthy. Obviously, none of these are. You can play this wrong. You can be too aggressive. You can buy stupid stocks. I'm not saying this is foolproof, but in this example, let's say you get, instead of $12,000 a year, $6,000, so about 15% a year in premiums, and then no appreciation. Well, after about 20 years, you would be making about $100,000 in this example. Of course, there are some assumptions that we're taking into account here. Now, let's move on to the next way of making money, which is rentals. And we'll get into crypto and index funds here in a second. But year 0, starting off, you have that $40,000, right? I'm not saying that it's easy to get into rentals, but you can do it. You can hit financial independence with rentals pretty well. A lot of people have done it. So let's say you have $40,000. You buy a house that's worth $160,000, so you put 25% down, cash flow. Let's just say you get 4% cash on cash return, which is not great. Some people make a lot more than that. Some markets don't allow you to get 4%, but some definitely do, especially if you're looking around the Midwest. Appreciation, we'll say 2% a year. So not a huge amount by any means, right? 2% is below, I think, historical averages. Loan pay down, we're just gonna say $4,000. I know that it amortizes out differently than that. It's actually like $120 a month at the beginning, so about $2,400 a year. $1,400 a year. But throughout the length of the loan, it's a $120,000 loan. Over 30 years, that's $4,000 a year. We're gonna say every year you have $5,000 more to invest. The total return after the first year is your loan pay down plus appreciation plus cash flow. And then it takes you, let's say you just have $5,000 more to invest every year, but you can't buy another house. You just collect that cash flow. You're still getting the appreciation and that kind of thing. That's awesome. But then After all this time, after 7 years, you get a second house. Well, now your portfolio value is twice as big. You're getting about twice the cash flow, twice the loan pay down, twice the appreciation. You still have that $5,000. And then after just 5 years, then you can buy, or 6 years, you can buy a third one. And you can keep on doing this, right? This is not as quick as something like options trading. After 14 years, you're up to about $6,200 in cash flow. Appreciation is about $12,000 a year. Loan pay down, $13,500 a year. So all in all, you're making a decent amount. It's about $32,000 worth of value every single year, and it's something that can be automated, right? After you buy it, you can set up a property manager, not really have to deal with it too much. It's not the fastest way, but if you did this, you can see if you do this for 20, 30, 40 years, you're gonna make a lot of money, and this is not even accounting for any of the tax benefits either. Now, we've talked about how Hong Kong is actually becoming a hub for cryptocurrency recently with a court ruling that crypto is property instead of a security in Hong Kong, providing some clarity that the US can't even provide. They've also doubled their economy since 1997. I want to take a second to talk to you about 𝗡cie, which is a unique worldwide competition for global startups looking to expand their footprint to Asia, specifically Hong Kong, using their proven innovation startup ecosystem. Now, this is put on by HKSTP, which stands for Hong Kong Science and Technology Parks Corporation, which is a public corporation that was set up by Hong Kong government in 2001 to foster innovation and technology development in Hong Kong. This is also being put on by Plug and Play China, or PNP China, which is a platform that allows global startups to get into the Chinese market and also for Chinese startups to get into other foreign markets. And this is actually one of the top companies from the US that's actually gone through this program. This is TensorFlight, and they have an API that helps property insurance specialists use near real-time data for improved risk evaluation and quantification. And here's another fintech company from the US, 𝗡cie𝗿𝗱𝗩𝗡, which is using augmented intelligence to help you analyze your data. Now, I think this was a really cool opportunity. They did offer investments up to $5 million. I'll leave a link underneath the video so you can see the live stream replay or get the winner's information. And thank you to 𝗡cie for sponsoring this part of the video. Now, the next way to retire is just plain old index investing. So year zero, you invest $5,000, maybe you get close to maxing out your Roth IRA, get about a 10% return. You just do this consistently. You don't worry about timing the market. You just dollar cost average into the market, buy index funds. At the end of 30 years, with 10% a year, you'd have almost exactly $1 million. So not bad, right? Not bad at all. Very boring. Most people won't make it this far, and you have to realize 20 of the 30 years through, you're only at $352,000. So it looks like you're only a third of the way to $1 million after 20 years, but then because of appreciation, because of compounding, you hit $1 million, so you triple in the next 10 years. So awesome thing you can do there that's super simple. And then what if you wanted to just dollar cost average Bitcoin? Well, if you had done this, if you had bought $416 a month, which is about $5,000 a year for the last 9 years, starting 9 years ago till today, like I said, you would have about $914,000. Now, at the peak, you have had 2.6 million. I'm not saying Bitcoin's going to do this in the future. I'm not saying that it will go up the same as it has since 2014. But you can see that if you did this for a couple decades and it has any kind of significant growth, I'm talking about just outperforming the stock market, right? And a lot of people think that Bitcoin will, or if you can time it better, right? You can buy in towards a market bottom, sell towards market tops. Even if you just look at where we were a couple months ago, 15,000, and you think we're going to get back to the previous all-time high, let's just say you think we're going to 75,000, right? That's a 5x. If you could do that in the next market too, 25x if you got in and out at the right time. I'm not saying to do that. I don't try to time the market like that, but Bitcoin I think has a lot of potential too. And then altcoins are a totally different game, which we're not even going to get into here, but you can make huge sums of money on altcoins if you play it right. Now, let me know which of these strategies you like the most down below in the comment section. I'm kind of trying to do all forward. I'm going to try to buy some rentals in the next year or two. Let me know if you think that's crazy. Thank you so much. And again, check out the links underneath the video to 𝗡cie, and I'll see you in the next one. Bye.